Alright then, muchachos, welcome to another video. Hope you guys are doing well. Had a terrible weekend, useless as always, right? Hope you are scrolling through your mobile phones and everything. Good old times, right? Now, the video which I'm speaking about today, the topic is why? What the fuck? Here. Yeah. Why a draw on liquidity is important for any, and I mean any, setup or strategy, right? Before we dive into the understanding of a drawn liquidity and how to determine a drawn liquidity in any particular market, I want to make sure that you realize one thing and one thing only, that in order for you to understand the intricacies of a chart, for example this one, the Nasdaq, right, it would be really helpful for you if you follow like a triad. For example, if you're following this one, right, and keep following it, like just keep going after it until it becomes second nature for you to recognize where price will go and from where it will go. Realize these are two different statements, like where price will go, but for price to go somewhere it needs to travel through another sphere of price and time, right? So this might sound a bit confusing to you all, but I'm gonna make sure that I explain it to you in a very simpler terms, very simpler terms. Okay, if we look at the Dow, right, we saw on Wednesday, we saw this high being created. Okay, this one, and to be very honest, I was bearish at this point, because here we are taking the highs, but here we were failing to do so, right? But if I'll go on a higher time frame, stick with the video guys, because if you leave it in between you might miss a lot of good opportunities to understand things in the market. Okay, here in the very beginning, right, you see these things right now, this low and this low, this low and this low. Let me just, yeah, this low right there and this low. Keep an eye on this low and this low. So we had a higher time frame crack in correlation in the triad, and these markets are designed to be bullish, guys. These markets are perma bullish until and unless there is a big war which might come, or the interest rates are stopped being rolling around, right? The interests, once the interests in the world which is going on, if it stops rolling, these markets, I'm 100% sure these markets will no longer exist, right? If you want more information about that, go read this book which I've just put on the cursor, Manifesto for the Abolition of Interest. And this, it's a different story and not for this topic, right? So let's stay here. Here again and again we're seeing the same scenario, like we have a sequential SMT at the lows and then it's gonna go higher and gonna go higher. But what I want you all to understand is waiting in this markets, waiting is as much trading as clicking a button and buying or selling. I would say that it's much more higher. Like, you're gonna have to wait for a very long time for your setups to show, or at least one part of your setups to show, right? so that you can take a trade confidently, doesn't regardless if you win or lose. All right, winning and losing is not in your hand. What's in your hand is waiting and calculating your setups being made or not being made. So here, if we see, I'll take the cross so that it's easier for you guys to understand. If you see here, YM created this high, right? This one, and we had a very much choppy price action over here. Very much choppy because of what's going on in America, the stuff with Powell and Trump. The last week had like only one day, which was red folder news, and it was very choppy. And the fourth week is coming up now. Fourth week might be really good, right? We might see a continuation or reversal yet to be established actually. But since we had this one crack in correlation at the lows established, we knew that the whole coming, at least the coming month, or at least if we see something which is higher or equal to it, we might not see a major reversal. A major reversal, I mean, not this one. This one was okay. Major reversal, right? So if you're seeing this high on Dow Jones, after that what happened was, I'll open up the chart. Okay, once this was created, we saw no, let me just use this one. Okay, this high, this high, this high, this high, and all these highs, this chop which you see between the transition of the second quarter of the day yesterday, I mean Friday, and the third quarter. Okay, so this high, this one, this, what you are seeing is, once a major high is created, right, this one move right there, this becomes the precursor for the liquidity to be engineered later on. Okay, right there. So not just this liquidity is engineered, instead this one, this one, this one, this one, and this one is engineered along with all these highs. Okay, now this becomes your drawn liquidity. Why? Because we are in a complete uptrend. This becomes your drawn liquidity once you see a crack in correlation at a higher time frame, which was this one. This was a daily time frame sequential SMT plus this candle, right? This is the candle which created the SMT. The very next candle, since we are in a bullish scenario, the very next candle, which is a down close candle, right? You see, this is the true order block, this one, on a 1 hour time frame. I'm not talking about the 15-minute, okay? I'm talking about the 1 hour time frame. Why? Because if I'll put my cursor on this one, exact candle which created the daily cycle sequential SMT between the triads, right? Meaning YM took the previous day's low, while ES and NQ failed to do so, right? So, but all these three pairs had the same up close candle. Okay, but for a bullish order block, it has to be a down close candle. Now, once again, I want to give the credits to Bucko Trades. You guys have to watch his videos, right, so that you understand what I'm trying to say over here as well. But from my perspective, even before you understand that there is a liquidity which is being engineered, you need to realize that there is opposing liquidity which is being engineered as well. This one this one, and this one, right? So you need one side of the liquidity to be taken in order for a setup to form, and to validate that setup you need to have a Kraken correlation. You understand? In order, let me repeat that again, in order for you to confirm your setup, you need to you don't need to have one side of a drawn liquidity. You need both the sides to have a drawn liquidity. Meaning what? I'll give you an example here. Okay, if you say that this is your drawn liquidity or engineered liquidity, right? This one also, suppose you're being bullish, okay? This one, either a key level or an engineered key level for liquidity to boost from, okay? An engineered key level, right? So suppose we came from here, we created this high, okay? A price reversed from there. Now any high which is being generated here will become what? These highs become engineered liquidity up until the point you'll see a fake break above, fake break before the engineered key level is hit, right? This one is a fake breakout to trap the retailers, and then again you'll see the key level being hit. There you'll see what? A crack here at the bottom. Okay, this can be 2-stage, this can be 3 stages. What do I mean by 2-stage? Muchachos, pay a little bit attention so you guys take the best of it. What do I mean by 2 stages? Stage 1 is you having a sequential SMT right there. Okay, stage 2 can be the true CISD. A true CISD is what? When you see a sequential SMT being formed, okay, and it's a bullish one. For example, here, the candle which created a bullish sequential SMT, if that candle is bullish, an up close candle, you look for the very next candle which is a down close candle. If you see the candle which created the sequential SMT closing above that down close candle, this down close candle which turns into an order block is the true change in the state of delivery. Okay, but if, for example, if you see this candle as a bearish candle, sorry, I said a down close candle, like before I said a down close for this up close candle, so don't be confused. This one, if it's a down close candle, okay, you need this down close candle to be engulfed or to be closed above. For example, here you see another one, we had a closure above. Okay, so this becomes a propulsion block, as ICT says. Okay, this is a bit advanced for anyone to know. So this is the true sequential SMT. So this is the stage 1. This one itself turns into a stage 2 for price. Okay, or if this one was a PSP candle, this becomes a stage 2, right? So stage 1 is the sequential SMT, higher time frame or mid time frame, whatever, and the same time frame has a true CISD. Okay, and I'll put the reference video of Bucko into the description, of course, and you guys can have a look at it. Now the question was, the idea was this: once you have these trendline liquidity phantoms being generated right there, okay, and then you see a fake breakout before the engineered key level is hit. Okay, over here, the engineered key level is this one. Why is it engineered? Price is higher, crashes, right? Creates the low of the day. This is Thursday, of course. See this high? Comes back down, fails to wick below or close below. This high, price comes back down, fails to go below this low. Or even if it went below this low, it failed to break below the actual low, right? So here you see an engineering of key level as well. This one is already established. You have one, you have two. So all you need to wait for, since it's also a high time frame, this becomes higher probability. Plus we are in an uptrend already, and we have an engineered liquidity at the highs. Now if I'll go on a 5-minute or any other smaller time frame, from now onwards, all I need to do is make sure the price is below two true opens. True opens. When I say true opens, it should be a true open of a session or the day. Okay. This one was the Q3's true open. Okay. Q3 true open. And this one was the daily true open. Daily true open. Right? And these are called stacked true opens, meaning a higher time frame true open should be above a lower time frame true open for price to be bullish, right? And if these cracks in correlations happen above that crack in correlation will be fake. Okay, so now these true opens, they become what? They become support for price. You understand? They become an instant support for price. So over here as well, if you see, we had what? A sequential SMT between the daily cycles too. Not this candle actually, it was here. So this one was the first candle which actually created the daily cycle, right? But in YM, it was this candle, this one, right? So since this is a bullish candle, right? This one, but in NQ, it was this one, the first one, right? And in ES, you see, it's this one. And if I'll go here, which actually created the candle in the 1 hour time frame, which created the daily cycle sequential SMT, right? That one is a PSP. See, here it's a down close candle, but the same candle is an up close candle. So you have multiple cracks in correlations happening once two-sided liquidities are being generated, right? Two-sided ones. But we had no news, so price was very choppy, very, very bad, and then it just couldn't reach all the way up to the engineered liquidity. Okay, so before even you begin to enter into a setup, for example, this was the setup right there, this candle right there, right? Take this one and then target these highs. That's 1:3, but the day ended before, right? So in futures, this position would have been closed, but if you guys would have been in CFDs or something, you would have held it, right? Now, the setup, it has to be where below, if you're bullish, it has to be below two true opens. It has to be valid in terms of having an engineered liquidity at the highs. Now, you'll be asking, how do I determine or where my drawn liquidity is? How do I know where my drawn liquidity is? Number one thing, a lot of you would be, realizing the fact that you have to be on a daily time frame, right? But that's not the case. There are multiple levels of draws on liquidities. There are midterm, there are high time frame, lower time frame, and middle time frame. Okay, and it depends on which time frame you trade on. Suppose you trade on a 15-minute time frame, you have a higher chances of waiting a lot, but being high probability, right? For example, if I'll go on a 4-hour time frame, okay, let me find an example for you guys. Yeah, see this high, okay, and you see this low right now, right? See, this high has been created already and been swept, but this is a very shallow run for me, okay, and we don't have that much of engineered liquidity at the lows. You can see why is it not engineered? Because, well, is it an equal low? If it's an equal low, then it is, yes, but if it's not, then yeah. On YM, see these lows, right, working in the framework of these two lows. Anything which is happening here is due to the fact that we had a crack in correlation at these lows, all right? But we have already touched or tapped this high, okay, and we are approaching the fourth week of the month, fourth week right there, okay. Now we have this high and this low as our two reference points, okay, two reference points, only this low and this high. Why am I not touching this low? Because we're working under this criteria now, because these two lows have been the prerequisite or framework for this price action, right? So if we see anything at these highs, right, at a higher time frame, see what I'm saying? These are the two highs and lows which you're working on, and then if we see anything working two stage at these highs, then we can target at least the 50% or these lows, okay, higher time frame. But that can also be a fact that we generate more liquidity, okay, right, and then we see again a crack in correlation to move higher. So anyone who tells you that you have to go on a daily time frame and then your drawn liquidity becomes the previous day's highs, previous day's lows, they're one point or another, they're right. But all you have to determine is waiting has to be there in order for liquidity to be generated. See, here we are under this one candle, right, where CRT comes in. So this is the high of previous week too, right? This is the high of Wednesday, and this is a major move. Now, if we see something, a sequential SMT or a smart money reversal at the highs, you can at least target the 50% or the lows. But to be fair, to be very honest, that approach which says you have to watch the closures of the bodies and the candles as your drawn liquidity, that's also correct. It depends on how you're profiling the market. You can profile the market with 6 hour candles, like you mark the opening of the 6 a.m. open, which is here. Okay, and if you want to be bullish, you buy at the open or below the open of the 6 p.m. opening. Okay, that's one way. And here as well, if you're selling, you should sell at, look at this, sell at or above the 6 p.m. open. Here we had no retracement. Maybe in another asset we would have had a retracement. Let's check. Yep, you see, it's present everywhere, literally everywhere. So you have to mark the opens, you have to mark the true opens of the day, you have to mark the actual open of the day, and be bullish or bearish according to that. Okay, because these markets, they just move back and forth a long time, right? So you see here, one asset here at this low, one asset tapped into or below the opening of the day, Tuesday, while others actually failed to do so. Even yes, right? And the one candle which touched it actually became a PSP, 6 hour PSP, and we moved higher. So these are the things which I wanted to speak to you guys of, right? To even get into the trade, you need to have your bias perfected, or at least have slight idea where the price will move, even if my setup shows up. Why? Because suppose your setup shows up, okay, here you are at a key level, important key level, but there is no generated liquidity. For example, there is no low resistance liquidity. Instead, it's like this. Even if your setup shows up here, it's gonna get trapped, chop up, turtle soup, and then back down. Why? Because you will not have a clear drawn liquidity for price to even target, right? Look at this. You don't want to see this. So watch out for the highs, watch out for the lows, and watch out for the gaps. Okay, look at how the the highs and lows are being generated. According to that, mark your trades and then mark your entries. Okay, this is good for you to target. Look, and the good thing is, this is my observation as well, right? If you see a trendline liquidity, what you can do is mark the high of the highest liquidity and the high of the lowest one, and target the 50% of that. This one, high of the highest wick, high of the lowest wick, and target the 50% of the range right there. Understand? And that is something which I've noticed, something which I just out of the blue, was just looking at the charts, and this is what I found. So muchachos, I hope you guys got some value from this video, and I'll be making more of these. I'll be posting more in my groups. So if you're not in my Telegram channel, join the Telegram channel, and I'll see you in the next video. Good luck, good trading.